Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, June 12th, 2007, and the market's closed. S&P 500 was down 1%, closing, losing $1.57 here at 149.72 is where I've got it right now. The markets are right on track for what I was expecting, which was, first of all, after that initial sell-off, what we were looking for was a rally up and test of the 5-day moving average. We saw that yesterday and then again today, and it keeps getting rejected at that declining 5-day moving average, once again showing that while that 5-day moving average is declining, you don't want to be trustful of these rallies. And what I was looking for further was a test of the last week's lows, and I said yesterday that it looked like it was on track to do that for Wednesday or Thursday this week. So I think tomorrow we'll probably get a test of these lows. The low print was 149.09. I'd like to see it go, into the 148s if possible, and then look for evidence of a rally above that level. Now, I'm not going to provide any stock picks tonight because I think the volatility is too high, and most things will probably just get stopped out anyway. Hey, by the way, a little plug. Take a look at Active Trader magazine for July. Page 48, they've got me featured in there, so I've got a whole page of press. But anyways, the S&P 500 is on track for continued downside and another test of that 50-day moving average. That's the case I've outlined since last Friday, and it's doing what it should do in these types of conditions. Yesterday I said that the lack of volume gave us reason to believe that the conviction just wasn't there for the buyers, and that was further reason for me thinking that we might get a test of those lows. So again, it's on track to do what a market in these conditions should do. Now the Nasdaq 100 also looking for a test of the lows in there. Yesterday I said that because it failed at that declining 5-day moving average, it made it indicated to me that a test of the lows was probable. In here we've got a low of 46.25. I would expect that to be reached tomorrow, maybe on Thursday. It doesn't mean, though, that I'm expecting it will bounce. I'm open to the possibility of a bounce after a test, but things could get ugly in this market. So we've got important, what should be support at about the 46 level. That's why I'd like to see that undercut. I'd like to see it come down to maybe 45.80, 45.75, make it look like it's failing, trap in a lot of shorts, get the longs to get rid of their stocks, and then squeeze them out up through there, and then we get back into that range. But anyways, that's what I'm looking for in the Qs. So again, I'm not going to provide any stock picks this evening because of the expected continued volatility. Semiconductors yesterday I said is basically neutral in this group, and on the daily time frame, we really need to continue to focus on that 35.5 level that was identified as a potential last ditch area of support for the semis last week, and these markets are doing kind of what I've expected them to do, which was that rally up to the 20-day moving average, now back down, but again more neutral than anything. Although with a rising 50-day moving average, we want to hold on to some hope that the buyers are going to be able to pull this off, but it doesn't make me bullish. It makes me say benefit of the doubt goes to the buyers, but it's foolish to be a buyer here until we have evidence of a turn. The IWM yesterday, I said this was looking more vulnerable than the other groups, and sure enough, we do have an undercut of those lows. So this market failed at the level that's been so important for the last couple months that we've been focusing on. That's the 83 level. It failed up in there, and as a result, now it looks like we're going to go down maybe towards the bottom of this range, towards the 80.75 to 81 level, somewhere in there perhaps. But this market did show signs of being weaker yesterday because we had, well, the other markets were able to rally up through the 5-day moving average before turning lower. This one almost touched it precisely, and again today. So you can see that that is definitely something that's being watched by a lot of people and acted upon as well. So continue to focus on that 5-day moving average. Let's hope we get a little bit of a washout in the markets tomorrow, and again maybe we get this group down to 80.75, 81 or so, and then it could be sold off enough in the short term that conditions could be good for a turnaround. Let's take a look at this 10-year yield that's been getting all the attention. A couple days ago I said that it looked like it was overdone on the upside, but I definitely wouldn't fade this move. And that, again, it just shows why I believe trend following is the proper course of action. And the people that try and sell short the yield or buy the bonds thinking that they're at a low, it doesn't make sense to do that. We've got a very strong momentum market in these bonds. People are just throwing their bonds away. That's driving the yield higher. And we look at the weekly time frame, we're right up against these levels here. The highs from last year, that is 2006. So maybe we run up through there and then start to pull back. But I do still continue to think that we will get a pullback from these levels. Worst case, maybe we run up towards 545, 550. But up there, I think if we do get this market to continue to rally up towards there on this yield, that it's going to do a lot further erosion in the equities. So continue to be on your toes, aggressive traders. Look for the possibility of a turnaround after a flush out, maybe in the morning. We'll see. But again, I will not be providing stock ideas for tomorrow.